in the most likely case, this period will show
Holy smokes, guys. The Federal Reserve, Jerome Powell, has just responded. The work we are doing here is paying off. The Federal Reserve is being held accountable. They're coming under pressure. The people are waking up. They know high inflation's coming. They know the Federal Reserve is being less transparent. They know the Federal Reserve is lying about inflation. And as you can see in that short clip, Jerome Powell is shaking in his boots. And what was he about to say? He was about to say we're going to see significant price increases, but he cut himself off. Even Jerome Powell doesn't believe his own words, but he's got a script in front of him. You can see he's looking down, reading the script, and he has to go off by what they say because he doesn't want to panic the markets. In this video, we're going to go over the latest Federal Reserve statement in a global economic debate on inflation with the IMF. And guys, this is huge. He gets into inflation. He gets into what he's going to do to deal with inflation, aka he's going to have to hike interest rates and much more. This is exactly what I've been warning people about, but they haven't been listening. And I keep saying they've only got two choices. They've backed themselves in a corner. Either go down the high inflation route, which could temporarily lead to hyperinflation, or hike interest rates to get inflation back under control, but that's going to crash the stock market and that's going to crash the housing market, because the only sentiment that is fueling the stock market and the housing market right now is money is cheap, so go out there and buy up houses, and money printer go brr, so go all in on stocks. But that sentiment could change very quickly as the stock market is at all-time highs, the housing market is all-time highs, and it looks like we're entering into one of the biggest bubbles in history. Okay guys, you have to watch this. I'm gonna go over exactly what the Federal Reserve just says. Watch how nervous he looks. And guys, I'm telling you, the governments and the Federal Reserves are there to serve us. We're not there to serve them. And with enough awareness, if you keep spreading these videos, because I can tell awareness is rising with the general population, people are seeing the theft and the debasement of their hard-earned money. People are waking up and we can make change together. And even me, Kevin, is slowly starting to come around, and I think hopefully we can get him on our side soon too. Listen to this, everyone.
Chair Powell, you've said inflation coming is transitory. Even ECB President Lagarde, I think, used your word and referred to it as transitory, but a lot of people are still wondering about that. They want to know, what does transitory mean? How long is transitory? How high would be too high for you to tolerate in terms of an inflation rate? Can you just expand on that?
Sure. So let me just be very clear on what we mean by transitory. So there's a difference between essentially a one-time increase in prices and persistent inflation. And when we say inflation, that's what we mean. We mean persistent inflation that goes up by 2% or 4% or whatever it is, year after year after year. And that level of inflation tends to be dictated by underlying inflation dynamics in the economy, as opposed to things like bottlenecks. So, you know, the nature of a bottleneck is that it will be resolved, that the supply side, if you will adapt, and that therefore whatever costs people have to bear in prices because supplies are temporarily tight as the economy reopens, those won't be repeated next year. We wouldn't think they'd be repeated. We'd think that the supply chain will adapt and become more efficient. It might take a year, but that'll happen. And so that's essentially what we're saying.
So as you can see there, he seems very nervous. And isn't it such a coincidence? Every time the governments and central banks mess up, there's always some big, huge event for them to blame it on. Oh, it was too hot today. That's the reason why it happened. Oh, there was too much rain. A ship got stuck in the Suez Canal. That's why inflation's coming. It's not coming from us increasing the M1 money supply by nearly 500%. It's not from us expanding our balance sheet by $4 trillion. And it's not from the government taking on trillions and trillions of dollars of debt. That's not our problem. It's all these supply chain problems. Look over here. That's the real problem. Guys, that's a complete lie. This is what they always do time and time again. Blame it on some other black swan event. But it gets even more juicy. Have a listen to this.
Remember, Sarah, that we've had 25 years of inflation dynamics, roughly 25 years, where inflation has been low. Many advanced economies around the world, at least for the last decade, have been unable to reach 2% inflation. Some are actually fighting off disinflation. And that has been the dominant sort of set of dynamics about inflation for some decades. And now we have a situation where the economy is reopening.
And so now he's saying there we've had 25 years of pretty much no or low inflation. Well, guess what? 30 years ago, a father could raise his family on one income with 3 to 5 kids. Now, a couple with just one child is struggling to make ends meet. So I believe, and I know all of you believe, that inflation over the past 25 years has been much higher than they're reporting, but they're downplaying it because they can't afford to lift interest rates, because then the government could default on their debt and the financial system would come crashing down. But he does get into interest rates very soon, and it's very, very interesting what he says.
Inflation psychology that has taken deep roots over the course of many, many years. So that's what we think. We think that there will be upward pressure on prices, which may be passed along to consumers in the form of price increases. We think that effect will be temporary. Now, let me say that there's no certainty in this, and if it turned out that inflation, and particularly inflation expectations, were to move up materially in a way that suggested that they were being de-anchored and that inflation might move persistently well above 2%, we would react. Of course, that would be our job. One of our 2 mandates is price stability. The other is maximum employment. We don't think that's the most likely outcome. But
so he just admits there are going to be short-term spikes in inflation. He's trying to downplay it, saying, look, it's just going to be temporary. It's not going to be high. But then he says if it does get out of control, he will respond. He will have to lift interest rates. Let's have a look.
To deal with that outcome, we will use them to guide inflation back to 2% if the need arises. But in the most likely case, this period will show temporarily higher prices, but not persistent inflation.
What would you do? You would raise interest rates?
Holy smokes, guys. We just caught him lying there. He was about to say we're about to see significant price increases, but he cut himself off. He doesn't even believe what he's own saying, but he has to go by the script. And he's admitting that if things get out of control, and now he responds about interest rates.
That's the principal tool we have is with inflation. Yes, the traditional tool is to restrain the economy and reduce inflation that way. Again, we don't think that's the most likely outcome. That is the playbook, though. If inflation were unexpectedly, counter to our expectations, to move meaningfully above levels where we're comfortable, in particular inflation expectations. These days, people think that inflation is largely a function of what the public expects it to be. And we would be monitoring inflation expectations very carefully. If we see them moving persistently and materially above levels we're comfortable with, then we would react to that.
So everyone, we finally got him to admit that inflation could be much higher than he expects. He admits he could be wrong, and he says what the markets don't want to hear, that they could lift interest rates to deal with that, and how high could they go. He didn't say how high they could go, but inflation does get out of control. Look what happened in the 90s and the 80s. They had interest rates at 15 to 20% when inflation got out of control, because once you start high inflation, it's very, very hard to stop. Imagine how devastating that would be for the housing market if interest rates went up just 5%. That's right, just 5%. We would see mass defaults, the stock market would collapse, and we would see the scenario playing out, which I've been telling you. And guys, I'm not saying this to be a doom. I'm just saying this because in 2000, everything looked great. In 2007, everything looked great. And a lot of retail investors, a lot of mum and dads, a lot of people like you that are watching this show, probably would have gone out there, got on margin debt in the stock market, got over leveraged in the housing market, and guess what? Then they got wiped out. And the worst thing people are saying right now is money printer go burr, everything's all good, the government will bail me out, the Fed will bail me out. Guys, they can't do this forever. And something that's dangerous, people always say, well, this time's different. That's famous last words. Things aren't different. If inflation gets out of control, central banks have to respond and they have to hike interest rates. And like I've been harping on about, they've backed themselves into a corner. They're either going to have to hyperinflate away the debt, or they're going to have to lift interest rates. Either way, if they hyperinflate away the debt, and that will cause some huge, huge issues, or like he says, they're going to have to respond and lift interest rates, and then the housing market and stock market will come crashing down. And guess what the CPI increase was in February? It was 0.4%. Now you may think 0.4%, that's not that much. Well, guess what that is on an annualized basis? 4.8%. That's more than 2.5 times the Federal Reserve's target of 2%. So that means they are going to have to lift interest rates much sooner than they're saying. They keep saying we won't lift interest rates till 2023. The Reserve Bank of Australia says not till 2024, but they're not in control, the markets are in control. That's why we're seeing bond yields spiking, because they know what's coming. The bond market always tells you what's going to happen before it happens, but everyone ignores it. And most of these retail investors have no idea about the bond market. So everyone, I just want to say thank you. The word is spreading. These videos have been taking off, and that means people becoming more aware. And together, like I said, we can bring about change. We can hold these banks to account, because social media is very powerful and people alone are weak, but together we are strong. And we are building a strong community here, and who knows what we can achieve together. So everyone, I urge you, don't FOMO in right now. Like what we're seeing here, there are huge risks building in the housing market and the stock market. Make sure you make an educated decision, because the future of the global economy is looking very weak. For all my loyal viewers and subscribers still watching, you're awesome. This was an emergency update. I woke up, I saw this, and I had to get this out to you guys straight away. Maybe I'll finally get some sleep after this video. But again, thank you for your support. If you're bored, I'll pop up some of my other videos here. I'll see you there.